Hello and a very warm welcome to the Money Side Up podcast. I'm Jarrad Brown, financial planner here in Singapore, and joining me today, my colleague and friend, William Cant, down in New South Wales. G'day, Will.
Hey everyone, it's great to be here again on the podcast. I've got a lot to cover off today and very, good interview coming up later with one of my, specialities, I suppose, with the US. So really keen to get into it today.
Fantastic. Well, Will, great to have you on board this month for the podcast. As you said, a lot to cover, plenty to dive into. Before we get into a little bit about the podcast, this is the place to be for all things money for Australians all over the world. So whether you're an Australian back home in Oz, you're considering becoming an expat, you're already an expat, or you might even be at the end of your expat experience and wondering how to plan to move home, this is the place to be. So we've got plenty to cover. Every month, every episode, we interview a different expert, so always plenty to dive into. But before we do dive into the podcast today, Will, would you like to run us through the disclaimer? We'll keep our legal team happy.
Yeah, so everything that you hear today obviously will just be general advice in nature. Don't race off the back of today's conversation you hear between us and make any drastic decisions. Obviously seek out, some tailored financial advice for your situation, and you want to make sure you get it right. So definitely get some professionals in your corner and get that help. And yeah, definitely don't make any crazy decisions off the conversation that we have today, as it will just be general in nature.
Beautiful. Well, now that we've kept the legal team happy, let's dive into some of what's going on in the wonderful world of finance. I guess a pretty interesting start to the year, not just the ridiculous weather that Australia seems to be having. We've got 40-degree days in Perth, and I hear floods over east at the moment in various pockets. But I guess looking at something sort of a little more related to what we're here today to talk about, being the Aussie dollar. We're back at sort of 114 against the Sing. We're sort of hovering around the sort of low to mid 60s against the US dollar. What are your thoughts? It's all eyes on the RBA when we'll see that rate cut. We saw employment finally start with a 4, which sounds like an awful thing to be happy about. But the RBA has highlighted in the past that once that unemployment rate does tick up to 4%, we're now at 4.1%, that will certainly be weighing on their minds in terms of when a rate cut comes. We've got a different meeting schedule this year than we've had in the past. So, next meeting mid-March, one after that in May. Well, what are your thoughts? Dust off the crystal ball. When are we going to get the much anticipated rate cut?
Yeah, well, look, it's so difficult to say, and any forecaster you got to take with a grain of salt. I mean, every single time they forecast, A is going to happen, B ends up happening, and then you've got half people saying one thing, half another. I know the RBA themselves have even stated, don't be surprised if we potentially increase again. They've stated that nothing's off the table. But a lot of economists are forecasting 1 or potentially 2 rate cuts sometime this year. The general consensus is that it will start around halfway through the calendar year, so maybe August, September, around then. Me personally, look, I'd love to see a rate cut as soon as possible, but whether that's going to happen, I think they'll hold for a little while, and then maybe November, December, towards the end of the year, we might see our first cut, if anything, this year.
Absolutely. Gosh, I start talking about rate increases. I'm sure that probably sends a bit of a shiver up the spine of many people listening, having had more than their fair share of letters and emails from the bank that their repayments are going up. I'm sure everyone's looking forward to things heading in the opposite direction. But you raise an excellent point. A lot of expats get into this trap of becoming almost quasi FX traders. We're all trying to pick the best rate, and it got to 115 last time, we've got to wait to 115, when really where it got to last time has no bearing on where it goes next. So really all we can be doing is taking advantage of rates as they are. We know that the Aussie dollar is relatively cheap, all things considered. We know that it might get cheaper, but at the end of the day, all we can take advantage of is what we know now. I was having a conversation with a client in the US, actually just yesterday, talking through what happens when rates go up or down in Australia. And it's a really good question. And sometimes we probably get, a little into the weeds of these things. But in simple terms, when a central bank cuts rates, everything else being equal, then that currency should weaken. Now, I say everything else being equal because there are a lot of other factors that come into play. And it also depends on what that central bank is doing with its own rates. So if we consider the Federal Reserve in the US and the Reserve Bank of Australia in Australia, obviously, if the RBA is cutting rates and the Federal Reserve is keeping rates on hold or increasing rates, then ignoring everything else, the Australian dollar should weaken.
Yeah.
It means we can earn less on Australian dollars. It therefore reduces the demand for Australian dollars. However, where we get into sort of nuances is situations like, so same scenario, the RBA might be cutting rates, the Federal Reserve might be keeping rates on hold, but I can still earn 5% in Australia and I can only earn 3% on my cash in the US. So even though the RBA is going down and the US is not, Australian dollar is still quite attractive. So that's where you really need to, I guess, sort of peel back the layers to really understand what's going on. But yes, I guess the consensus there is take advantage of what we know now. If you are planning to spend Australian dollars, move back to Australia, buy a property in Australia, contribute to super, locking in rates as they are now, probably not a terrible idea. We can probably reflect back on this podcast in 6 or 12 months' time and either pat ourselves on the back or do a bit of editing and pretend we said something else. Of course, I'm joking.
And look, I was going to say exactly what you just said there. Like we can sit here and forecast and based off obviously the data and what we expect to happen, but we've seen it one too many times where it doesn't always work out as rationally and as logically as we'd like to think. And sometimes, the sentiment might be completely different. That actually drives, a completely different change to what we thought was going to happen. So definitely, always really important to keep your ears to the ground. Make sure you're checking in, keeping your finger on the pulse with these type of things, because they can do a full U-turn, at the drop of a hat. So definitely, we'll guess as best as we can, but that's what it is. It's a guess.
Absolutely. And I guess before we dive into the interview today, the other thing that's been front of mind for so many, particularly sort of first quarter of this year, 2024, these stage 3 tax cuts. What on earth is going on? We've seen a bit of a backflip, which looks like a bit of a nuisance, but still, I guess, relatively good news for most taxpayers in that the majority of people will end up paying a bit less. But I guess there's a bit there for expats to think about if they're planning to return. And probably quite a bit to think about, I guess, for Australian residents. But do you want to just, give us a bit of an overview of what's happening?
Yeah, well, first and foremost, as you said, a bit of a backflip. So Albanese government going back on an election promise not to change or revise the tax cuts, but with the cost of living crisis, with everything been going on the past few years, they've proposed some new changes. Again, look, these are, probably 90-95% going to come into effect, but there is the potential they could still change again. But at a high level, the previous tax cuts that we had coming in were really going to benefit more higher income earners. So if you were making about $200,000 a year, you'd save about $9,000 in taxes. Now, these new cuts, what they've done is effectively taken some of those savings, those tax savings from the higher income earners and brought them down to, your mums and dads, your everyday people. So effectively everybody that pays tax will get a tax reduction moving forward. And the way they've done that is the first bracket after the tax-free threshold, they've reduced that. So effectively more people will save money and the higher rate earners will save a little bit less. So if you're on about $200,000 at the moment, previously you'll save about $9,000, now you're going to save about $4,500. So still, a substantial tax saving. $4,500 is nothing to balked at, but definitely not the $9,000 that it was. Generally, with these new rates that they're bringing in, the new proposed changes, if you make over about 150K, you're going to be worse off than what you would have been. Now, for a lot of expats, they may still have Australian income. So rental income is a great example of that. What's going to happen as well from July 1, if these changes come into effect, the first dollar currently is taxed at about 32.5 cents. That should go down to 30. So again, expats with Australian income will still see a savings there as well too from the first dollar, 2.5%, not a crazy amount, but again, every dollar definitely helps. But look, you never know with these type of things. It looking pretty positive that it will come into effect. But I honestly wouldn't be surprised if there was one or two more slight changes before July 1 actually comes around. And I suppose on that note too, a big consideration for expats is thinking about what you're doing now and potentially what you could hold off until next financial year, because the rates will change and you will be getting that saving. So for instance, selling a property may be better to wait, 6 months and get the new tax rates. And in the same way, are there things you can be doing now, prepaying interest on a mortgage or anything like that, that you'll get a higher tax saving if you're doing it before July 1st. So lots and lots of considerations, but generally they're all quite positive.
Brilliant. So, always plenty to think about, I guess, when it comes to tax cuts. I guess all reasonably good news, but definitely things that require planning. And as you say, particularly for expats, 2.5% is 2.5%. If somebody's willing to give me 2.5% extra on my savings, I'd probably be willing to go and open the bank account and go through the effort of setting that up and shifting the cash across. So, to your point, if I can make a super contribution or prepay some interest and earn 32.5% in effect rather than 30, then it's probably worth getting onto, or at the very least seeking some advice this financial year before June 30, just to clarify for everyone listening. Australian financial year, July 1, June 30. So we've got, at the time of recording this, about 3 or 4 months to go before the financial year ends. So plenty to think about. Watch this space. Obviously, not a day goes by we're not hearing about this cost of living crisis in Australia, which is very real. Whether you're renting or you're buying groceries or you're paying electricity, everything just seems to be pinching that little bit tighter at the moment. So probably a very welcome change for many. But as you say, we'll potentially, I guess, some more changes before the financial year and before this all comes into effect.
Yeah, we'll definitely be listening closely to see, what's going to happen. But as you just touched on, have a look at things now. The best time to start doing something is today. Well, yesterday, really. The second best time is today. So the sooner you start to plan these things, the better. But I suppose a key point on that, just because something might be a smart decision for tax purposes doesn't mean it's a smart move overall. So never make decisions just for tax purposes. That is just one of the many benefits of putting money into super or prepaid interest or, doing these types of transactions. But you've got to make sure that obviously, the other benefits stack up as well and it fits into your situation.
Absolutely. If tax is the only benefit of an investment, then it's probably not a very good investment.
Correct.
That's the saying goes. So, look, let's dive into our interview today. We've got sort of, I guess, changing gears a little bit. One of a good friend, a bit of an expert in his field, Jason. Today, we know that there are many, many thousands of Australians that move to the United States every year, taking jobs, whether it be in San Fran or New York, or Seattle, all over the country, to be honest. And we know that that's going to continue. The US remains a very popular place for Aussies to move to, whether for personal or professional reasons, usually a stepping stone for the careers of so many. But when it comes to the IRS and the Australian Tax Office and how the two interact, there are just so many things to consider. Federal taxes, state taxes, local taxes, how Australian taxes interact, how the double tax agreement works. So we're going to cross to this interview today with Jason. We've got a huge amount to cover, so let's dive right in. A very warm welcome to the Money Side Up podcast, Jason Stoch with Uptrend Advisory. Huge thank you for joining us today, Jason.
Thank you, Jarrad. Thank you, Jarrad and Will, for having me. Very excited to be here.
Wonderful. Look, a lot to discuss today. As we all know, a lot of Aussies in the United States, more and more looking to move. Naturally, a bit of a stepping stone for many, many Aussies in terms of their career progression, starting businesses, joining different companies, an exciting place to be. But of course, the one thing that often gets overlooked is the tax questions. So we're going to go down that rabbit hole a little bit with Jason today, and thrilled to have the expert on all things Australia US tax with us. So we're going to shed some light on this situation. So before we dive in, a little bit about Jason. He's the Managing Director of Uptrend Advisory, a chartered accountant in Australia and a US CPA, and runs the firm that specialises in helping Australians living in the US with their taxes and Americans living in Australia. Talk about a full-time job, Jason. I don't know how you do it, but we're going to hear a bit about that today. So I guess as a bit of a starting point, could you just give us a bit of background on yourself and, really, I guess, why you've chosen to focus on such a niche area?
Yeah, thanks. Thanks, Jarrad. In terms of my background, you covered it pretty nicely. I'm a chartered accountant in Australia and then a US CPA. most Australians at some point, there's some kind of fascination with America. And, like all the Australians, I came over pretty much straight out of university or college, as they call it over here, and started working in the workforce at a Fortune 500 and, got my US CPA at that time. And I noticed, there was a bit of a gap in terms of, the DIY solutions like TurboTax and things like that, or H&R Block, where, you know, you're a US tax resident and you've got things going on back home, but these things aren't really catered to deal with it. And when I went through the pain myself when trying to file that, I would go to an accountant and they would not really ask the right questions. And so it became apparent to me that, hang on, I've got to just roll up my sleeves and do it all myself. And as all businesses start, it's word of mouth with friends. I had other Aussies that moved with me to New York, and then they were asking me to help. And then it kind of just snowballed over the years. And then suddenly I have a tax practice specializing in expat tax, and I did not think that was my future.
Oh, that's brilliant. I love it. And I can imagine for a lot of Aussies who go and, ask their Australian accountant, whether it's, an H&R Block or it's a sort of full service accounting firm, and start talking about US tax obligations, I imagine the answer is, oh my goodness, way too hard. Don't even want to venture in. So I imagine you're sitting in that niche, sort of quite lonely, I guess, sometimes.
Yeah, it does. It does get quite lonely, especially like at the mid-level. Like obviously there's the big four firms like Deloitte and EY who can handle the both sides of the coin at that high level, but it's just not affordable for most people, given their fee structures. So, for a CPA firm with an international focus, we are, pretty competitively priced where, the common person can, accept our fees and get compliance and coverage and have that peace of mind that everything's being dealt with correctly on the US side, and that they don't have to, worry about the big bad, being the IRS coming for them.
Well, I'll throw over to you for a couple of questions.
Yeah, perfect. Thanks, Jarrad. Now, I will say a little bit of a disclosure here. We could have gone for about 10 hours, I reckon, with these questions because there is so much that we can ask Jason and get his wealth of knowledge into. We did have to compact them as much as we could, but we could definitely go for quite a long time. But question really number one on my mind is I want to know the key differences between the Australian and US tax system that you think Aussie should be aware of. So, it is really a key one that people don't think about, and they think it's very similar, but there's a lot of differences, aren't there?
Yeah, there's so many. And like, every year it still amazes me when I get these kinds of questions, and it just shows like how it's night and day. For example, a lot of people are so set with the financial year end as June 30, but then over here, it's a complete shock when, you tell them actually it's calendar year. And I say that because some people will still report Australian things on the US returns on a financial year basis when it doesn't line up. So you're either overstating income or understating income because you're not lining up the years. So that's the first key difference. The second key difference is, when you're an Australian tax resident, you're taxed on global income. That's the exact same in the US. When you're a tax resident, you're taxed on global income. But the IRS takes it a step further where they want to know all about your non-US assets, what you've got, where you've got it, what income it's generating. So it's much more intrusive than the ATO. And then there's also special treatments for structures like self-managed super funds, proprietary limiteds, trusts, and some nasty ways that they can treat investments as well, that the ATO just doesn't do that. So it's quite a stark difference.
Definitely. Yeah, I know that the more that we delve into it, the more you understand the differences really are chalk and cheese, which I think a lot of people don't understand. So how do US tax residency rules actually affect Australian expats then, and what are the main implications they need to think about?
Yeah, so the first one as an Australian expat is really, what visa are you living in the US on? Because some of the visas, you're going to be a non-resident for a fixed period of time. Others, you're subject to tax residency test, and some you're just always a tax resident. So, people coming on J1 or F1 visas, those are the visas where you're exempt from being a US tax resident for a certain number of years. Whereas the most common visa, like the E3, you are subject to what's known as the substantial presence test, a physical presence test, whereby if you're in a country for more than 183 days, you're a US tax resident. And then on the other end, you get a green card, you're always a US tax resident, just like a US citizen. Why this all matters is because of what needs to be disclosed when you are a resident versus a non-resident. So if you're able to be a non-resident, great. It means you're only going to be taxed on US sourced income. Everything from Australia, everything from Europe, everything from Antarctica, it's off the table. Whereas if you are a US tax resident, that's when you have to consider everything. And that's where the complexity comes into play.
Yeah, perfect. Now, Jarrad, I believe you have a lot of questions too. I think we're going to take it in turns going through these questions, because we, as I said before, we've got plenty that we need to go through and plenty that we want to cover off with you.
Absolutely. I guess if we start with a bit of a basic one, a lot of basic perhaps at least at first glance. Your typical Australian expat moving over to work with maybe one of the global tech firms, taking up a role, taking up a visa. Could you just sort of walk us through, I guess, at a high level, how income is actually taxed in the US?
Yeah. So in the context of being a tax resident, step one is, what is your total worldwide income? So your US income from your W-2, and then any income from Australia, be it interest, dividends, rentals. What is the total? Apply some basic deductions, most commonly in the US known as the standard deduction, and then that net result is thrown into the marginal tax system, because the US does have a marginal tax system like Australia. And then at that stage, it shows what is the tax owing. At that stage, you back out tax for tax paid to Australia through foreign tax credits. And then your net result is a tax bill or tax refunds. So that's kind of the step-by-step as to how it works from a functional perspective, before factoring in all of the disclosures that you'll have to make, like the assets and things like that.
Okay. That certainly makes sense. And I guess, for your typical Australian, the whole, you touched on this earlier around disclosure and different financial years. But I guess, again, at a high level, double tax agreement, how does this sort of prevent, or, what do Aussies need to know when it comes to tax? What's taxed in the US, what's taxed in Australia, what gets disclosed?
Yeah, so the tax treaty exists between the ATO and IRS, and why I'm specifying the ATO and IRS is important when you consider the state levels. I'll get into that in a second, but what the tax treaty is designed to do is to prevent double taxation. So if you've got Australian employment income you're meant to disclose to the IRS by virtue of being a US tax resident, well, you also get to disclose the tax paid on that income to offset what the IRS wants to calculate to help you avoid being double taxed. There are some situations where the ATO will not tax you, but the IRS would tax you. And that's just a situation where there's a gap in the treaty and where the tax laws differ. The most common one is sale of primary residence. In Australia, you pay no CGT when you sell your home. In the US, you pay no CGT up to a cap. And then when you're over that cap, well, then you pay CGT. So if you think of like a typical Sydney property with 1 million gains, amazing. But if you're in the US tax system, some of that is going to get taxed because that would be over the cap. And then the tax treaty comes into play at the state level, where it sometimes doesn't come into play. So every state, almost think of them as like their own country, and they will have their own tax law if they do have state income tax, like Texas doesn't. But if they do they abide by the federal tax treaty or not? Because again, the tax treaty is between the ATO and IRS, not the ATO, IRS, and California Franchise Tax Board. So, the common states where Aussies go, New York, California, Massachusetts, New Jersey, Connecticut, they don't recognize the treaty. And what that means is, if you're a resident of that state, they're going to tax you fully at your marginal rates on whatever income you have from Australia. So that is a situation where you actually do have double taxation, even though there is a tax treaty.
Mm. So was that a hot tip there, Jason, that Texas is the state that maybe Aussie should be looking at?
I mean, barbecue is pretty good, but there are
So
a bunch of states with no state income tax, but yeah.
yeah. So in that tax treaty, then, when we look at Australians, moving to the US, particularly when we look at, income, retirement savings, investment, how is that impacted there?
Yeah. So that is another flaw in the current tax treaty where things like 401k, Roth, superannuation, they're not explicitly spelled out. So the ATO has already said we will tax these things. They've already got community rulings on these. So there's no protection from the tax treaty on that. You will get a credit for tax paid to the IRS on those same streams. So you do get that, but otherwise it's not exempt. And then on the other side, for superannuation, when you withdraw it, it's pretty much just going to be considered taxable income. The main grayness is in the accumulation phase as to how it's treated, just holding it. And that's where every accountant has their own opinion as how it's going to be treated and everything like that. But unfortunately, until the tax treaty's updated, everyone's playing in the grey.
And look, I think that really led to my next question regarding super. It is really grey, isn't it? Because the tax agreement, I believe, was created in the 80s. Super obviously became compulsory for Australia in the 90s. And I know there's a lot of people that are fighting to get, the treaty changed and make sure super does become, I suppose, more included. What's your thoughts on that? I mean, any other final points on the super side?
Yeah, I would love it for that to be included in the tax treaty. So that way it's black and white. It's either taxed or not taxed, and that's that. But generally speaking, accountants fall into a few schools of thoughts. The most common one, if you have a self-managed super fund, that's probably the worst one to have in the US tax system. The IRS will view it as a foreign granted trust where the gains are going to be taxed annually. But if you have like a regular industry super fund and it's mainly made up of employer contributions, then it's just an exercise of disclosing it every year on the foreign forms. You're not going to be taxed on the gains. There are other elements of this where complexity could happen, where if it's a regular fund, but you're making way more contributions than your employer, then it could start being treated similar to an SMSF. So it's just one where it really depends on you, on your funds, on the composition, and your accountant.
Gosh, a lot to think about, and I guess so many financially responsible Australians, they pump up their super and then they move abroad for an unexpected job or something else, and then find themselves in all sorts of difficult situations. I guess the other big one is of course property. As Australians, we all love real estate. I don't think we're terribly unique in that regard, but I guess we've kind of got two situations to look at. Australians buying property in the US and then perhaps returning to Australia, and Australians who own property in Australia and are now living in the US. Now, it's probably more common the latter, I guess, that a lot of our audience is really going to want to understand. But yeah, what do people need to know, I guess, when it comes to, that residential property they've got back in Australia, maybe they're renting it out, and now they're a tax resident in the United States?
Yeah, so in that circumstance, firstly, they're going to be paying tax to the ATO, assuming, they're profiting off of it. And then if they're a US tax resident, it's the same thing. They've got to disclose it to the IRS on the schedule for the rental, claim a tax credit for tax paid to the ATO. And then if they're in a state, hoping that state abides by the treaty, otherwise just knowing they're going to pay the tax to that state. The big one, though, is, again, that sale of the property because there are those situations again where the ATO may tax less than the IRS or may not. But a special one when it comes to passive income, such as capital gains, is something called the net investment income tax, or the NIT. That's beyond the tax treaty, and that's what the IRS could levy on capital gains. It's 3.8%, similar to a Medicare levy surcharge. So that's something to be mindful of at the federal level when selling property. And then at the state level, it's really important to be super aware of your state before pulling the trigger, because there's been many people that have come to me over the years as new clients and tell me, oh, I sold a property last year. And then I ask them where they live, and then I have to tell them the bad news.
Mm.
So planning is super important when it comes to property. Um, and then on the US side, owning property actually yields some great tax deductions. You can actually deduct some mortgage interest against your return through a process called itemizing. So that's a very unique US thing where home ownership is kind of a pro, and then also getting some CGT exemption when you sell in the future. Whereas in Australia, you don't get to deduct your mortgage.
Gosh, I'd hate to think how bad the housing crisis would be if we allowed main
Yeah.
residents interest deductions as well. Oh, it would be nice though. I might even consider moving back to Australia if that happened myself, as I sit happily here in Singapore. So I guess, Jason, one of the things you've touched on, quite consistently is this awareness of state taxes, sale of property, anything else that could be involved. I guess, is there anything else, Australian expats should be aware of when it comes to state level taxes, whether on income or I guess anything else that you'd sort of flag as something for them to pay attention to?
Yeah, I mean, that's really the key one as Australians with overseas assets and income streams, just being mindful of the possible double taxation. Otherwise, it's a hard one to answer because every state's like their own country, that they'll have different kind of rules. Like New Jersey, you can deduct some rent you pay as a deduction there. California, you can't. It's just a hard one. Yeah.
Mm.
So how does that change then once you leave the US?
So at the state level, assuming you've left, well, then you're going to file a part year resident return at that state to show you're outbound. So that's a clean exit. But then at the federal level, it's all about what we started touching on at the start with tax residency. And are you ceasing tax residency? Do you no longer pass the physical presence test? Or are you moving back to Australia with a green card, in which case you're still a US tax resident? So all of those things are pretty important in terms of timing and planning, because there's also, planning opportunity where, there are certain opportunities that are pretty contextual, and definitely something you can get tax advice on, but something, financial planners would also be able to help you move all of those chess pieces.
Yeah, I think that feeds in really well to my next question too, because I always say, if you fail to plan, you're planning to fail. Oh, yeah, as the saying goes. But what do you see are the common mistakes that people make when they, don't plan around these things?
Yeah. So an example is, that property situation. They sold a property in California. Well, when they were in California before, getting advice, it's too late. You're going to have to write a check to California. Or not structuring things in Australia or cleaning up structures in Australia before landing to simplify their US obligations. Or thinking about timing opportunities when you're planning to repatriate to Australia, be it with your US assets or income streams, and the timing of when to withdraw it. So, to what you said, having a plan and strategy in place is so crucial so that there's no surprises.
Mm, definitely, definitely.
Couldn't agree more with that one, obviously. Um, Look, I guess, Jason, one of the other common things we're always asked is, changes. There's that many myths and noise and headlines in the market these days. They almost have to be that sensationalized to grab anyone's attention. But I guess when it comes to, tax obligations for Australians, is there anything that's sort of being changed or altered or different trends you're seeing? Whether it be in the US or the tax treaty or anything else that Aussies should be aware of?
Yeah, I mean, the tax treaty, I do know that there was a lobbying group that submitted a bunch of proposed changes, but it's just a question of when someone's going to look at it, if they're going to look at it. Um, that's would be a really nice one. And then otherwise, in terms of tax law changes and things like that, the US tax code is completely different to Australia's. Um, it got completely rewritten in 2018 with the Tax Cuts and Jobs Act. All of that tax code is set to expire at the end of 2025, in which case it might be completely new rules again for everything. Um, So that's something to be mindful of. There are groups that are proposing to extend it, in which case keep things status quo, so the rules stay the same. But otherwise, every year the IRS does kind of refine forms and make it more convoluted. So that's also just something to be mindful of.
Hmm. Makes a lot of sense. And I mean, I guess, gosh, as we go through this and down this rabbit hole, as we said earlier, why you would try and do this yourself is just beyond me. Because it seems like there's going to be something that you weren't expecting, or a new rule, or a new fine, or a new fee, or a different interpretation, and all of it's going to cost you money. But I guess outside of people just reaching out to you and Uptrend and having you look after all of their US tax obligations, are there other resources in the US or different channels or groups, or how does the average Aussie expat keep up with their US tax obligations?
Yeah, so outside of having, a dedicated accountant, the expat community is strong in social media. So there are Facebook groups where people talk about these issues because they're common pain points for everyone. Um, there are, a lot of financial advisor groups, myself included, who have collateral like these podcasts or webinars or things like that, where, it's free content and it's very informative. Every year I've done these webinars because every year there's more Aussies moving to the US, and it just helps so many people either get a free refresher on things or see, or maybe suddenly, the lights come on. Oh, I had all these things, I weren't dealing with them correctly, or catching people as they just came in and, helping them before they do the wrong thing. So it just, it pays to be very proactive as an Aussie, to seek out this information online, on YouTube, on LinkedIn, because the IRS doesn't really have consumable material that's digestible for a normal person. Like, yes, you can go and look at all the forms and the instructions, but most people, it's like reading a different language.
Yeah, good luck trying to decode that. Look, I think you touched on a really important point there, that there is a lot of free education and free information, like the Facebook groups, podcasts such as this. But at what stage then would you say it's appropriate for someone to actually get professional tax advice? Especially in Australia and living in the States.
I would say at all stages of the life cycle. I would say before moving to the US, make sure you've quantified what you have and understand the treatment of what it's going to be, because maybe once you understand the treatment, you will shuffle things around. Um, and then when you're over there, just making sure things are set up in the right way for either you to stay there or for you to come home. And that's kind of where it's kind of a combination of tax professionals and financial advisors and financial planners, because, as a tax professional, I can only talk to tax advice and tax implications. Whereas as financial planners, you would know there's a laundry list of considerations, and tax is just one bullet point on that list. So you don't know what you don't know. I can only talk to certain things. So it's important to have the whole spectrum to make sure there's no surprises. So um, pre-departure planning, when you're over there, and maintaining status quo with the long-term strategy of do you stay or do you go kind of thing. And then pre-departure is also where you enact that strategy as to, okay, let's take out the 401k, let's sell these shares, let's do all that before landing in Australia and being back into the Australian tax system.
Yeah, definitely. Look, and I think another thing too, Jason, like your story is really great. Like how you've moved over there. You said you worked for Fortune 500 and started your own business and found your niche, and obviously, doing quite well with it at the moment. And as you said, there's more and more Australians moving to America every year. Beyond taxes, though, what would you say are the main, cultural or financial adjustments that an Aussie moving to America would really need to think about? What would be, like, say, your top three cultural financial adjustments that have to consider?
Um, it's a funny one, and everyone will have different answers, but um, our sense of humor, it takes time for them to understand. You have to be a little bit careful sometimes,
Yeah.
because they won't, like, the message sent is not necessarily the message received. um, Healthcare is a big thing over here. We are very spoilt in Australia, and it's a very big, serious thing over here in terms of how quickly it could, you know,
Mm.
create negative consequences. And then, I mean, I don't want to say the tax system because I'm the tax guy, but that is a big difference for people over here as well. Um, and then I don't know. I would say it's quite a lot more materialistic over here, but that's just my perspective. But in terms of the big rocks, definitely, um, personality differences, humor differences,
Mm.
healthcare, taxes, and then just the day to day. You'll see that they're wired a little bit differently.
Yeah.
That's a very interesting one. We've always found, with a number of American friends in Singapore and just American clients we've dealt with in the past, our Australian nature of sort of taking the mickey out of our friends. They couldn't understand why we're being so awful to people we supposedly cared about. But yeah, a bit of a nuance I'm sure many would would have to get used to. Look, I mean, I guess having worked with so many Australians over there for many years now, could you share with us a success story, a case study, whether it's helping someone avoid disaster or tidy things up? I guess something that sticks
Yeah,
out in your mind as a particularly memorable case.
yeah. One case that comes to mind is the classic case of an Australian couple moved over here, didn't get any planning advice, nothing, um, and self-filed through TurboTax. And they just put their W-2s and 1099s on there. Um, they actually found me through one of the webinars that we did a few years ago, and I had the chat with them, and it turns out that they had over 10 investment properties, multiple SMSFs, multiple trusts, proprietary limiteds, and you know, thought you deal with Australia in Australia and the US in the US, which is not the case when you're a US tax resident. Um, so they had quite a large level of exposure as a result of that with all of the penalties. But thankfully, because, you know, it was not willful, like they just genuinely didn't know, the IRS actually has an amnesty program that you can use to get back into compliance with them. It's most commonly called Streamline. And through that, we were able to retroactively fix all of their returns, include all of the forms, everything, and get them back into compliance with the IRS and save them millions in penalties. So, that client, I think they'll stick with us for life as a result of that.
Definitely.
Wow. I imagine that must have been an incredibly stressful time once they figured out what they'd missed, what they'd gotten wrong. Until you really solved all of that for them.
Yeah, you just don't know what you don't know until someone tells you.
Mm.
Mm.
Absolutely. Look, I guess one final question, if we may, and as Will said earlier, gosh, we could chat for hours. So we'll have to have you back on future podcasts because this is going to continue to be topical. More and more Aussies are going to keep moving to the US. But one thing we do like to ask our guests on the podcast is for that golden nugget. If you could share just one piece of advice with Australians planning to move to the US, or even Australians already in the US, what would it be?
Education. The biggest thing here is education. So if you educate yourself on firstly doing an inventory list of what do you have in Australia, what do you have in the US, kind of like a balance sheet, and then realizing or teaching yourself or learning, well, what is required of me over here when it comes to these things. Because ironically, one of the biggest things as an expat in the US is not so much about tax minimization, it's about tax compliance. So if you educate yourself and figure out what your requirements are and you meet the requirements for them, that's going to save you so much pain and headache and issues and worries and things like that. And then once you've got that, then you can look to this optimization thing, and then you can look to this whole planning strategy and everything like that. So, education is the most important thing for an expat in the US to avoid any kind of surprise.
Fantastic. I love it. We're certainly big advocates of education, financial literacy. So yeah, I think that's a wonderful note to leave on. Look, a huge thank you from us. I think you've given so much gold in today's podcast, in the answers you've shared, the time you've given. We're extremely grateful, as I'm sure the audience will be. I'm sure many more of our clients will be seeking out your advice and guidance over the years as they move to the US. Or maybe there are many Aussies who are reconsidering their plans to move over there after some of what you've shared today. But certainly the importance of education and advice. But no, look, on behalf of Will and I and everyone involved in the podcast, a huge thank you. Jason, Uptrend Advisory. Any questions, obviously reach out to Jason. You'll find his details in the notes. But yeah, Jason, look, huge thank you for your time today.
Thank you, Jarrad and Will. It was great chatting with you both. This, to me, just felt like a casual chat at the pub. So it was very nice speaking with you both. And yeah, really appreciate you both having me on this.
Fantastic. I'm sure we'll chat again soon.
Okay. Thank you.
Thanks, Jason. Thanks so much for everything there, Jason. As I like to think we prefaced, there is a lot to cover off when we look at, the US and the Australian relationship and how taxes are different. So it was great to have his expertise on that sense. But I do want to stress as well, it is an ever-changing landscape, between the Australian and the US, the tax regimes between the two countries and becoming an expat or moving between one another. So definitely always listen in for updates and listen in for changes, as Jason did touch on a little bit. Now, as we've mentioned, guys, this podcast will be coming out on the last Wednesday of each month. Each time we do interview an expert in a different field. So it is fantastic to always listen in. Make sure that you're up to date with anything that you need to know as an Aussie living anywhere in the world. The podcast will be on all major hosting platforms, Spotify, Apple Music, to name a few, and many more. So wherever you get your podcast, you should be able to find us. And really importantly, if you, the listener, want anything or any questions, I should say, answered, reach out to us. We are more than happy to take on questions and, hey, I'm moving to X country. What do I need to know? Can you guys do an episode on that? Or, hey, I want to know how to repatriate next year. It's really confusing. Can you guys do an episode on what that looks like? The more that you feed into us, guys, and the more questions we get from you, obviously, the better we can answer them.
Absolutely, Will. You've really hit the nail on the head there. And really, to wrap up, look, if you've gotten value out of today, leave us a review. However you found out about the podcast, tell someone else. We'd certainly be grateful. That's the only way this spreads. We're not here to sell anything. We're not selling products on this podcast. We're really just here to hopefully provide value, certainly provide information and content, but hopefully something that's of interest, of value to Aussies all over the world. So you can check us out on all of the social channels. We're at Money Side Up. We've got a fantastic guest speaker lined up already next month, so don't miss that one. I'm sure you'll get a ton of value out of that. Really appreciate you giving us your time today. 5-star reviews, always welcome, or otherwise constructive feedback, fire it through with your questions. But really appreciate your time. Have a fantastic week. Thank you again, Will, for joining us, and we look forward to seeing you all on the next episode.
Thanks for listening, guys.